Ryan,
Hello.
how we doing?
Doing good, man. How are you doing, Aaron, today?
Good. Welcome everyone. Welcome Zinger Nation to After Hours Trading with Ryan Rozbiani and myself, producer AB. We're gonna go ahead and start as we often do and just take a look at the overall market. Check out SPY. Wasn't too pretty of a day for SPY today.
It was not. Yeah, today was an interesting day. Today was one of those days we've been discussing a little bit about on the channel. I've been discussing about it on my Twitter a lot. We got the CPI data. Before I jump into SPY, I'm going to cover the CPI data a little bit so that you viewers can understand what's going on. What is CPI data? If you want more details on it, I have it on my YouTube page. You can just search Ryan Rozbiani or CPI data, and it's one of the first few videos that comes up, and you can check that out and learn more about it. But just in a nutshell, it's the consumer price index data. It's a reflection of how sort of inflation works and how things are. We had a really big jump this month. It wasn't expected to be this big for year over year. Month over month, it wasn't as much of a big jump. I was expecting us to go to 1. Last month, we were at 0.6. And this month, we jumped over to 0.8, which wasn't too bad for month over month, but still a rise, which is reflected negatively in the stock market. But the biggest jump and the scariest headline was that over the last 12 months, which is the year over year increase, we had an increase of 4.2% before seasonal adjustments. And this is the largest increase since a 4.9% increase for a period since September 2008. And if a few of you know 2008 was not a beautiful year for the stock market, for the housing market. It was quite a mess. And the biggest reason for this jump essentially is, let me make this a little bit bigger, is the index that they use for the trucks and cars, for used cars and used trucks, jumped up by 10%. So if we come down here, you can see how CPI data has fluctuated month over month. During COVID, it was literally artificially brought down into the negatives, and it's they've been letting the lever go, and it went up, and then they brought the lever down again, and then it's been slowly going up month over month. This increase isn't too bad. It could have been a lot worse. I was expecting closer to a 1.0, excuse me, for month over month from 0.6 to 1.0, which would have been a lot worse, to be honest with you, between us. But that's okay. That was good. That was a good sign. But the big one was the year over year, which went to 4.2, which was bad. And if you look, it breaks down. It's essentially a summary and an average across all of these food items, energy services, commodities such as like vehicles, new vehicles, used vehicles, apparel, medical services, shelter, transportation, medical care services. And if you look here, if you average out all of these, you can see that the big kahuna that causes the big jump is this used car. And if you look here, it's even bigger. So this is the big guy that caused the big jump. And it's unfortunate. It reflected negatively in the markets. But if you've been watching this show and watching this channel, which I hope you've subscribed and hit the bell button to be notified as videos come out, we've been discussing this data for a while in this show. So I'm hoping Zinger Nation was prepared, and I'm happy that we were preparing you folks for this. So let's go into SPY. So SPY is the S&P 500 index. It is the broad index for the market. We talk about it a lot on this channel. I start every single show with a review of SPY, QQQ, the Russell 2000, and Bitcoin to hit those 4 big indices. Yes, I know Bitcoin is not an index, but it still matters these days. So as you can see, RSI on the daily chart is strongly negative. The MACD is going downward very hard. We're going to open up just looking at the chart. If you look here, we've been discussing this gap. We've even had it drawn on the chart. If you've been watching the show, you've definitely seen this gap between 390. Essentially between 400 and 403 has been a sore spot for a lot of traders and investors with the fear of it coming down and filling this gap. Well, I think that in the next coming days, we will fill this gap. I think that we will come down and fill this gap. Now, don't freak out, for lack of a better word, because of this, because I know this is a little scary to hear that, oh man, I'm already super red and we're going to get even more red. That's okay, because after you have to recall, after the end of every single bear cycle, every single bear market, there comes a bigger and beautifuler bull market. Let's take a look back here. Back in March, when we had our big correction, everyone called it a crash, but it was really a correction. We came down into February. We came down to as low as 371.88. And then we had a nice, look at this, a nice bull run. Yes, I know this wasn't reflected in the small caps market, which a lot of people that watch this show trade. Yes, I completely understand. A lot of people haven't been seeing this directly in their stocks because it's been mainly affecting the large cap and somewhat mid cap stocks. That makes sense. That's why you adjust and rephrase your tactics and you kind of adapt and start trading those, or start shifting to long-term investing. A lot of the people that I work with in my group have shifted to long-term investing and building wealth. Right now is the time where generational wealth will be made. We will see the stock market come to lows. We will see the stock market hit points of pain for a lot of people, and then it will start to recover. If you recall last March, this big dip right here was a big generational conversion of wealth. People who didn't have patience, people who were paper handers, sold in this dip. People that bought in this dip, because these green candles that you see here are people purchasing. People that bought in this dip and are now at where SPY has hit all-time highs have now converted a generation of wealth. You can talk to some of the best traders. You can even talk to some of the most beginner traders. They had a massive amount of wealth created due to this crash. And I agree. Richard is saying people panic. You're 100% correct, Rich. People are panicking. And here, if you look at it in the grand scheme of things, this dip was much bigger than what we're dealing with now. This dip was parallel. It was a double bottom here that resulted in a nice little bull run. If I remember correctly, this was into the election. One thing that I don't talk about, which I do talk about, but people don't really catch on, is this time right here for me was brutal. I was heavy into SPACs in my swing account, was heavy into SPACs. I had come into level. Essentially, my account was at NAV, quote unquote. It was at everything that I deposited. All the gains were diminished. But I hodled. I averaged down on my plays that I had high conviction in. And then the bull run came, and I was able to sell them for gains and convert them into my long account. That being said, you're seeing an opportunity as broad as day here. We've been talking about it on this channel with producer AB, with the Benzinga, with the Zinger Nation family, that this gap will most likely get filled because of inflation, because of fear, because of panic, because of FUD. Fear, uncertainty, and doubt is FUD. Once you have those three together, it's a combination of the stock market coming down. Today, we had one of those variables solved for us. Frankly, I'm glad the data was worse than we were expecting. Why? Because this means that it gives us a lot more room upward than downward. What does that mean? If we were expecting inflation, everyone on CNBC, ABC, Fox, every single news network has been talking about inflation, inflation, inflation. All the memes about the lumber prices and copper prices and gas prices going up that we see on Twitter. If we now are finally affirmed that, hey, inflation is here, the market will start adjusting. The market will no longer need to be afraid that inflation is coming, because inflation is quote unquote here. And the market can start adjusting and saying, okay, maybe it's time to start buying. But I do think that there will be more bleeding before there will be healing. What does that mean? Because as we start to heal and go into this next cycle, we will slowly and surely be able to kind of build our next generation of wealth here. And that's what's the most important aspect about that here with this show, is that we will come down and most likely cross this. We're about to break the 50 moving average. Today we didn't, but we could in the next few days. But keep your pants tightly fastened, buckled up, and don't be afraid of this. The next one I want to talk to you folks about is QQQ, which is a parallel index to the NASDAQ. This reflects all of our favorite tech stocks. If you've been following me on Twitter, if you've been watching the show, look at these two gaps that we've been discussing. There was one here and one here. It's not really reflected nicely here, but I can show you a photo on my Twitter that shows it a little bit more in detail. If you give me 1 second, let me pull that up for you. And here we go. So if you look here, there was a gap between 320 and 322 and another gap between 324 and 326. Those two were both filled, and we broke the layers of support, and we've come down to this area, but this area has held. Personally, I believe that QQQ will come down and touch this support level of around 300, 307, between 305 and 310 before it bounces, or we can come back down to these lows where we were at March and then make our bounce again, sort of forming a double bottom. If we go back just a few months ago, what do we have a parallel here? It's a double bottom trend again. It didn't touch double bottom exactly, but it was close enough. It's close enough where it paralleled a trend of a double bottom here. And if we sort of, I'm going to attempt to draw a trend line here for you. If we sort of follow this trend line that has been occurring, it broke it slightly here. And again, that might be due to me fat fingering it a little bit and coming down a little bit too low. But we're sort of have been following this trend line. I'll stop drawing new lines. Come on. Oh, hold on. That's why I gotta change it back to the old tool. The select. Oh man. Okay. So you guys probably get the gist of the idea that if we kind of, there it is. I got it. So if you look here, you can see we've been sort of following this trend line for a very, very long time. QQQ comes and bounces off of this trend line. Again, this is why I think we'll come down and probably touch this level here of 305, 307 before we make our bounce and ascend. And this will parallel to SPY filling its gap and beginning its ascent into a bull market. Now, again, this might not reflect parallel into your small caps. This might not reflect parallel into even your mid caps. It might affect macro caps better. We will have to see and adjust. This is one of those markets where you have to adapt on the fly. The rules are sort of out the window right now, which is unfortunate because a lot of us are used to technical analysis rules. But even technical analysis is telling us that we are heading into a downward trend, which is not that bad. Don't be too afraid of it. Use this opportunity to build wealth. Buy those stocks that you never thought you could afford. Your Teslas, your AMDs, your NVIDIAs, your tattooed chefs, your Palantirs, your Etsy's. I'll talk about 3 of my favorite ones in this stream after I go over the Russell 2000. But use this time to start building that wealth. So now let's go to the Russell 2000. And so the Russell 2000 parallels essentially the small cap market and the penny stock market, right? So if you look here, there's no gaps to fill, which is a good thing. But of course, this is also headed downward and it's been paralleling SPY a lot, which is weird because it usually doesn't really parallel SPY exactly, but sometimes it does, but that's okay. But if we look here and we draw another trend line, and hopefully I'm getting better at this trade view tool as well. If you look here, we broke support today, which is unfortunate, which is also another thing that you have to remember is support is not a definite thing. It can always be broken. We broke support here, which means we will probably come down and test these levels of 150, but maybe 155, then 150, depending on where it is, and then begin our bounce again. But again, nothing to be worried about as long as you shift your tides towards something a lot more easier to trade, like long-term investing, or maybe stay away from trading and swing trading for a little bit and go to long-term investing and look for those stocks with those attractive PE ratios, forward PE multiples that are good for you, and you can take from there. Fourth index that I want to talk about, it's not really an index, but I like to talk about it on the channel, excuse me, is Bitcoin. Bitcoin did something really, really weird today. Bitcoin went down on CPI data going up. So I made a video on my YouTube channel. If you check it out, I paralleled Bitcoin across the past year of CPI data coming out, and it correlated. When CPI went up, Bitcoin went up. When CPI came down, Bitcoin went down. Not today. I don't know what happened. I don't know what it was, but Bitcoin took a turn for the worst. It could also be that we've lost Bitcoin's dominance in the market for the first time in a long time. If you're paying close attention to the markets, you will see that Bitcoin has lost its dominance to the altcoin market right now, and a lot of money has flown from Bitcoin into altcoins like Doge, like Shibu, like SafeMoon, all these favorite coins that people are trading. And that's okay. This is seasonal. Things cycle in and out, and that makes perfect sense, and I get it. But I was I'll be honest, a little bit concerned at this drop that happened today because Bitcoin is advertised as an anti-inflationary asset. I'm a personal Bitcoin bull. I made a purchase of more Bitcoin last night. I dollar cost average in, so it doesn't matter for me if we're at the top or at the bottom or in the middle. As long as you dollar cost average into any asset, it doesn't matter, and you statistically will do better than trying to time the markets because it's almost impossible to time any markets. You can use as much data as you want. Something can come out of left field and throw you off. But if we sort of look here, you can see that it's still respecting the Fibonacci levels, which is a good thing, which is fantastic. It's not as volatile as Bitcoin used to be. The volatility of Bitcoin is dropping. Yes, you might be saying, are you crazy? We have a 7% drop. We have a 5% drop. In the grand scheme of things, it's not a big deal in my opinion. Look at this asset. The asset has ran up significantly over the past year and a half. Give it some time to breathe. Give it some room to grow. Give it some time to adjust to the markets. People take profits. People build. People are adding more and more to their positions. So in my opinion, it's not a bad thing that Bitcoin is sort of trading sideways for a little bit, giving it time to kind of adjust, for more people to come in. And there's a lot of, essentially, for lack of a better word, rumors that there are bigger institutional investors coming into Bitcoin. Mark Zuckerberg, for example, is rumored to be joining the Bitcoin party. Their annual meeting is, I believe, in 2 weeks. He put out, the reason people are saying he bought it is he put out a picture and he said he bought 2 goats. One of them is named Max, one of them is named Bitcoin. So people were like, oh wow, Mark Zuckerberg might have bought Bitcoin. So again, that's just speculation, and I don't like to bet on one person moving an asset. That's why I love the fact that Elon is behind Doge and behind Bitcoin, but it's really I like for the asset to be self-sufficient. Producer AP, do you have something to say about Facebook and Bitcoin?
Yeah, I mean, it just seems like now we see, the companies that announce they put an investment into Bitcoin, they'll get a little bump. Bitcoin will get a little bump. So it's like it's a double whammy on both sides,
Yeah.
If that ends up happening, I assume if Facebook announces they make a big investment into Bitcoin, the Facebook stock will see a little bump, and then you'll also see that reflected in Bitcoin. And I think right now that's like the biggest catalyst for Bitcoin is going to be as more and more of these big institutional companies make investments into Bitcoin, that will help kind of climb that price up.
I agree. I totally agree with you. I think that's a good thing. We saw Palantir discuss it yesterday that gave their stock a bump. They were riding the mid 17s to low 17s. And then the Bitcoin announcement came and it popped it back to the 20s. Today, of course, it's simmered down because of this data, because Palantir is still a company that is in the budding stages. So these companies in their budding stages, especially in tech, rely on inflation being low, rely on the interest rates being low so they can borrow money for cheaper to keep operating until they become profitable. But I agree with you 100%. I think institutional investors, as they come in, it will help. But also, if you look at the patterns of Bitcoin, it's not, in my opinion, you could even say this is somewhat of a reverse, not really a reverse head and shoulders, I guess. But I don't know. It's not too clean.
We'll have to ask Neil about that tomorrow.
Yeah, we got to talk to Neil. He's the expert on this kind of stuff. I can't hold it. That guy does some of the best technical analysis. So if you're not subscribed to the channel, subscribe. You can watch Neil in the mornings. And by the way, folks, do us a favor. Hit the like button. There's a bunch of you watching. Just tickle that like button. And when we get to the Q&A segment, we'll make sure to answer your questions first if you've hit that like button ahead of time. So, Producer AB, next I want to jump into some of the earnings that came out this week. We had this week and especially today. Earnings play a big part in the market and they move stocks up and down. One of my favorite stocks that a lot of people give me flack for is Tattooed Chef. They had earnings today right at market close. Their conference call, as we can see, is in progress right now. The stock is sort of flat in after hours, which is good. It's probably due to the raised guidance. And let's take a look at their actual earnings so we can actually get an estimate. So their EPS was down. They missed negative compared to the 0.1. I believe this estimate was extremely premature by Wall Street for putting out an estimate of this company being profitable this early. It was hugely not a good idea in my opinion. That's just that was not smart on their part. Sales beat, which is good. I like seeing that. This is a company that Costco loves, that Target loves. I actually, I don't know if I posted, I think I posted this on my Twitter real quick. Let me take you to this. If you look here, Costco has Tattooed Chef on sale for $3 off. So if you folks are in Tattooed Chef and you want to help the stock go up, you can go buy some Tattooed Chef. But it's a good sign that these warehouse stores are still supplying them, still keeping them, still bringing new SKUs in. And if we actually go into the actual earnings document, this isn't the quarterly report from the SEC, but this is sort of a breakdown. And let me zoom in a little. Oh, it doesn't let me zoom in. Okay, that's completely fine. Revenue was $52.7 million. It's about a 60% increase compared to the $33.2 million in the prior year. Tattooed produced product revenue that was a record $36 million, an increase of 105%. So they doubled revenue, which is awesome. Compared to the $17.6 million in the prior year period. Good. Gross profit was 20. They had a 26% gross profit margin, which is good. Remember, these guys are in the food sector. Getting profit margin is very hard. They're doing it. They operated at a net loss of $7.9 million compared to the net income of $5.9 million in the prior year. So, of course, we know these guys have been affected by Rona as well, rolling out. They've been adjusting to growing pains. They're expanding into a new facility. I'll cut them some slack, which is fine. Adjusted EBITDA was a loss of $3 million compared to the adjusted EBITDA of $7 million in the prior year. So their losses year over year are down, which is good, from 7 to 3. I think that's fine. And I know they increased guidance. Guidance isn't in this doc. Guidance is here. Yep, here we go. Guidance was increased. Their estimate is 235 mil to 242 mil versus the 224 estimate. So once you increase guidance, that's a good sign. That means the company is showing that, hey, we believe we're going to do much better than what Wall Street expects, what we originally expected to do. So that helps stabilize the stock price even on earnings miss. So it's kind of like a 1-2. But the risk there is once you raise guidance, if you raise guidance and you miss, things get ugly. Things start to get wonky for the next quarter. I think they should be okay for next quarter as we're going into the summer cycle. We're in spring now. People are going out more, picnics, all this stuff, shopping more. They're a health conscious food, so it's a good thing. We have some breaking news coming in from the chat. Sung is saying the Colonial Pipeline is starting operations, so that's good for gas prices. So let's jump to ZOM for a second. This is actually, thank you, Song, for letting us know. So one big fear element in the market today, and essentially for the past few days, was that this pipeline wouldn't be working because of all the cybersecurity stuff that's going on. Now, I haven't been following the story too closely, but I do know that this was an effective fear catalyst in the market. So ZOM has been slowly coming down because of this, and we can see in the after hours it's sort of healing. It had a flat day, but it's sort of down a little bit, but it's not too bad. But that's good. We'll probably see the news thing pop up sometime soon here. Let me see if it pops up in news. No, not here, but that's okay. But yeah, so for those of you who are following that, we can check that out. You can check that out and check it out for yourselves. So let's discuss some more earnings. So let me pull up earnings again. I want to see. I know. Oh, Playboy also reported today. That was another one that I want to talk to you guys about because that company has been surprising me in terms of their stock price. I know that their float is low. I know that their market cap is not that it's not a massively market cap, but it's still a 1.61 billion market cap. So they're still meat on the bones there, and it's one of those SPACs that succeeded. It's like a DraftKings where it didn't fall into the after we SPAC and merge, it descends because the NFT hype helped it, and the resurgence of the company and restructuring of the company has definitely helped it out and kind of helped take the company into a new face forward. So if we look at their earnings, their sales beat. They were estimated of 38.47, and they beat sales, and they came in at 42.70. If I was a betting man, I wouldn't say they're profitable. I would have to see, are they operating at a loss here? Grew 34% year over year. Adjusted EBITDA of 67 million. The company, yeah. So they're still operating at a loss, which was due to the 13.8 million year over year increase in selling administrative expenses. Okay. So I think that maybe next quarter they come in profitable, or maybe just a hair under profitability or on the cusp of profitability, but they will probably become profitable sometime this year, which is a good sign. I believe that this is fantastic for this company. I honestly, I never took this stock seriously into the SPAC merger. I thought the company that was SPACing them was off their rocker, but they've been doing fantastic. Look at this uptrend, especially in the market that everyone's like, we're losing money, but they have been in a bit of a downtrend because they're cooling off because the stock went to 60. Just like most other stocks, once you get to a peak point, people will start taking profits, and you should be taking profits on the way up. If you bought it in SPAC land in the 10s, the 11s, the 12s, 13s, you should be taking profits on the way up, and then you can always add on the dips. Again, not a financial advisor, but that's Playboy for you. Another one that reported is Bumble, I believe, reported today. Bumble, let's see. They did. Bumble's also one of the newer companies to the stock exchange. They just became public this year. Okay, EPS of 1.69 does not compare to the S. Wow, they smashed earnings. That's fantastic. They're essentially profitability in terms of EPS. Sales are at 171. They beat their estimates, which is great. Congratulations to them. Total paying users increased 30% because there is a freemium model, and then there's the premium model, so 30% increase. So more people are paying. I guess they want to get higher ranks in the algorithm. I'm not sure exactly how their payment system works. I guess, is it more swipes? I don't know. I'll leave that to you kids out there. So the good thing is it looks like they raised guidance as well. Sees Q2 sales of 175 to 178 versus 174. So they raised guidance, and they also raised guidance for year over year, which is they raised to 724 to 734 versus the estimate of 723. So they believe that they're going to have a smashing year, which is great. I'm really, really happy for them. I did not buy into the IPO, and I'm still not crazy about buying into the stock. This is the thing here, man. Take a look at this. Playboy came in at a loss. They raised guidance, but they still came at a loss, and they were green. But Bumble came in as they're profitable. They smashed earnings. They smashed revenue. They raised guidance. They raised year-over-year guidance. They hit all 5 metrics, and they're down 2.3%, and they're red on the day. So that's the thing. A lot of people have been asking, is like, what do we do about earnings? Should we sell? Should we buy? How is it going to go? It's really a coin flip. It's really a coin flip these days. It's very, very hard to tell. Mitigate your risk. If you like a position, dollar cost average in, or have powder to go into it later, depending on how you feel about it. So it's always smart to play these things by ear and then take it with a grain of salt, and it'll help you kind of mitigate your risk as you're going into and out of a position. So that's definitely something to keep in mind with those two companies that had earnings. I'm just pulling up an earnings calendar right now on the side because I know there was one more company that had earnings today, I believe. Yeah, today there's another company that had
Wendy's
earnings.
did, but that's smaller.
Every time Wendy's stock comes out now, it reminds me of our interview with Foley where we asked him, like, if there was one stock you would buy, what would it be? And he said Wendy's. So to me, I always get a nice chuckle when I see the Wendy's. It reminds me of that interview.
It would probably be doing pretty well since he said that, I'd imagine.
Yeah, I think maybe he's got the hot hand or something. I don't know. I'm really curious to see Coupang.
Wix, Wish, Sonos, Coupang later today.
Yeah,
I don't know if they've
let's go to
yet.
Coupang. I have no clue who Sonos and those other guys are. Let's go to Coupang. And then I want to talk a little bit about, for those of you who are on PSTH, I want to talk about PSTH because they rallied today. CR, we actually spoke about Tattoo Chef. All right, people are asking for Sono, so we'll definitely cover Sono. Infinity 88, I'll cover Tesla as well. I think it's a massive opportunity. Coupang is down. That means they probably beat earnings. They probably had good earnings. Yep, see, Coupang sales 4.2 million, up from 2.4 million year over year, so essentially doubled, almost doubled. This is a 74% increase of sales. Here's the full doc. Okay, very good.
You're getting some slack in the comments for not knowing what. You don't know Sonos? They make the speakers.
I don't. I'm not gonna lie to you and say I know them, but I might know them if I see them. So let's give it a quick Google.
Go to there.
Oh, okay. Now I know who Sonos. All right. I mean, dude, look at how small their logo is. The logo should be here.
You got a good point. Their logo is pretty small.
If you got a $400 speaker, right? You got to have the logo somewhere where I can see it. Here, it's like the color. This font should be white. This is the only one that's doing it right here. You can't blame me for not knowing. Come on, Nick. Don't give me flack. Come on, man. But it's all right. So I'll go to Sonos next. So Coupang had good earnings, but they're down. But that's this market right now, right? Let's go to Sonos. Okay, Sonos is up. So that means they probably had bad earnings. I'm totally joking. So Sonos, it looks like it's a somewhat of a low float, not exactly a low float, so not too bad. But they beat earnings and raised guidance. So let's go. Q2 adjusted earnings EPS. So this is one of those companies that, yes, I know we are in Q1, but they're reporting Q2 earnings. Their calendar is a little bit shifted. It's also, if you probably go to into their balance sheets, you'll see, like you can see here, some companies have it that they're in FY21 right. They're in FY22 right now. It's a little bit weird. Some companies operate weird, but we know that this is their current earnings. They're not future projecting. EPS of 31 cents, up from 34 cents year over year. So that's fantastic. Sales were 332 million, which beat the 248 million estimates, which is great. I mean, man, people are really buying these speakers. Reported the quarterly earnings share of 31 cents per share. Okay, so that's essentially what we just read. They raised guidance. Let's see. Update. Sonos raises guidance to 195 to 225 million and to 225 to 250. Wow, this is a big jump. They completely went a whole interval up, which is good. And they're raising from 1.525 to 1.625. Again, another interval up. This is fantastic. Now it makes sense. And they beat EPS by 0.45, and they also beat on revenue, and they've got a good outlook. So congratulations to anyone who's been in Sonos and who's been hodling. Hats off to you. Maybe I'm the idiot who doesn't know about them, but and didn't even know they were a stock. But congratulations to anyone who's holding them. There you go, 15%, 14%. Now this is the time where you want to take some profits because market open tomorrow. Maybe some of these bigwigs have seen the stock go up and they need their cash for their hedge funds and they've invested in Sonos. They probably will need to at some point take some profits. So definitely keep your eye on this one into tomorrow, especially if you're in it. Let's see. Baba is slipping. We would love your thoughts on Baba. Okay, so let's go into Baba. Alibaba. Alibaba is one of those companies that I don't touch with a 10-foot pole in terms of buying shares because of the whole China-U.S. relations with everything going on between us and delisting fears. I try to mainly stay away from the Chinese companies that are listed on the U.S. exchanges because of that fear. So I can see right here we've come down back to December lows, which was a gap down, which is not good. This stock, man, it really takes a beating every few weeks. This thing can't catch a break. It seems like it had its massive bull run, and then from October, when like the election happened here, everything else ran. This thing ran up into the election. It's doing the inverse of all the other stocks. It just tanked and just gapped down multiple times and gapped up a little bit, but then went up and then it's come back down. So it's given up all of its gains in this time period. And essentially, we're back at the December. I don't know where you folks bought into this stock. I don't like this stock. I don't like this stock one bit. I don't care how good their earnings are. I don't care how big their market share is in the Asian markets. I'd cut it, especially with the fear of delisting. If a company like this gets delisted and any hedge funds or any indices or anything holds it, they have to sell. They have to liquidate. By law, they have to liquidate. So this will result in a massive drop in the pricing. And I don't like this stock. There's a lot more opportunities out there. I promised Infinity 88 that I would talk about Tesla. This is your opportunity stock right here. I was talking about a massive transfer of wealth that could happen right now in this time period. Again, it happened in early 2020. In 2021, this could be another opportunity. As long as you scale in, as long as you don't throw the whole ship at the stock at once, you have an opportunity to transfer your wealth. So look at Tesla. Tesla is a stock that was at a highs of 900. Tesla is a stock that's growing. Tesla's last earnings were profitable without two of their cars being in production. Their Model S and the Model X were not in production, or the Model S, the S and X were not in production. It was only the 3 and the Y, because those were going in to be retooled to have the same uniform layout on the dashboard, the steering wheel, and all that right now. So yeah, this is a massive opportunity. This is, again, I know in terms of Wall Street, everyone says this is an overly valued stock, but look at this. We're almost back down to where we were in March, where it's essentially under 500. This is a big drop here, but this support level is holding. We will probably break this support level, to be honest with you, and come and retest the mid fives. I think we'll retest the mid fives. I've been slowly adding on all these red days, like 1 or 2 shares a day, because I think that this is going to be a powerhouse stock. This is an ETF inside of a stock. You have solar, you have energy, you have EV, you have charging, you have tech, self-driving tech. This is going to eventually be an Uber-like company where the car is self-driving, will drive itself and do ride sharing for you and deliveries. They've got Bitcoin. There's so many good things about Tesla, and I'm not just a Tesla fanboy. I know that there's a lot of people that like CCIV. Let's take a look at CCIV as well, because I know folks parallel this, but CCIV is going to have a lot more trouble than a Tesla overturn, because CCIV has to prove itself. Tesla is just proving itself now, and even Tesla was proving itself being profitable for, I think this is now 6 quarters in a row now, I believe, that they're profitable, and they've proven profitability, and they're still struggling. Now, I get it. A lot of people give them flack because Kathy Wood said that they'll go to $3,000 a share. I don't see it going to $3K a share for the next maybe 10 years, but I'll be honest with you, I'm happy waiting 10 years for this to go 3K a share. So every time I buy the stock, I'm all right, this will be 3K in 10 years. This will be 3K in 10 years. This will be 3K in 10 years. So that's my mentality and mindset with Tesla. And yeah, so folks, if you're watching, please do me a favor and hit the like button. Also, just want to do a quick little plug. If you want to follow me on Twitter, it's at Ryan Rozbiani. The link should be in the description. If I don't get to any of your questions here, you can follow me there, and I'll be more than happy to answer the questions there, just because there's a lot of questions coming into the chat today, and I don't think I'll be able to hit on every single one of them. I want to make sure that you can have a channel to come and talk to me and ask me, and I will try to get back to you as soon as possible. So follow me there at Ryan Rozbiani. The link is in the description. So let's go to another one. Someone's asking about Apple. Someone said Tim Cook and Apple. I will come back to that in a second. There was another stock up top here, Arrival. A lot of people are talking about Arrival. Arrival to me is like CCIV. A lot of potential. A lot of potential. Just they have to prove themselves. They have to go into production. They have to prove they can produce. They have to prove that they can get to where they need to be. And then once that happens, then they can get there again. If you scooped shares down here, congratulations, you're probably writing it up. If you're here from beginning of time when the SPAC happened, you're probably not too worried because you're up 80%. But I think that the stock might come back down and test these levels. Look, if you look here, the RSI is curling down, MACD's curling. We have to zoom in, but you can see a little arc forming here on the MACD. But I like Arrival a lot. I like that they have the contracts. I like what they're doing. I like the look of the product. It's so rare that all of these line up. I like the team behind it. I like the tech behind it. I just feel that they are going to, just like CCIV, just like Fisker, just like all of our favorite new EV companies that are rolling out. It's going to take time to produce. It's going to take time. It's going to take energy, and they're going to need to produce results of these vehicles coming out. And they're going to hit hiccups. You can see every time Tesla has a car crash, it becomes front page news for 2-3 weeks. These companies might face the same issues if, God forbid, an Arrival van crashes, catches on fire, and something bad happens. So I'm not saying that it will. I'm just saying that please keep that bearish thesis in the back of your head for every stock. I have a bearish thesis in the back of my head for every single stock. Tesla, my bearish thesis is, what if Elon leaves? What if more car crashes happen? What if self-driving comes out and, God forbid, 10 people get hit with cars? The stock tanks. So you need to always have a bearish thesis in the back of your head along with the bullish thesis so that you can kind of balance yourself out. And that's why they say, like, traders remove emotion. That's the easiest way to do it. Have your bull thesis, have your bear thesis, have them both in the back of your head, and it will bring you to an equilibrium so that you'll be able to trade without quote unquote emotion, which is very hard to do. But if you have these two and you kind of respect these two, it'll give you a better thought process going into it. So apply that to every single stock, and I promise you it will give you much less of a headache because you'll be going into everything prepared. CR saying they are the expensive, nice speakers. Yeah, man. I mean, I have like Google, I have one of those Google Pods as a speaker, and I'll be honest with you, I'm someone who uses headphones to listen to music. I'm not a speaker guy, and even when I'm home, I have headphones on all the time. I'm not a speaker dude. That's just me. Maybe I'm weird, but we'll see. Maybe in the future I change. Maybe I'll grab one of these speakers. Let's see. Chris is asking me to go over Mark. Chris, I did an extensive video on my YouTube channel on Mara. I spent 30 minutes analyzing it, and I talk about Mara on this channel every single time that I'm on. Do me a favor. If you just go to my YouTube channel at Ryan Rozbiani, and you just click on the first Mara video that you see, there's a 30-minute analysis using fundamental analysis, the same stuff Warren Buffett uses to give you price targets on Mara and where I think it's going. And I'm going to be doing a new one on that where I'll be analyzing Mara in depth using the new Q1 data to give you more accurate price targets for it. That one is, I don't have enough time to jump into it and do that here because it's an extensive analysis. So if you go and watch that video, I promise you it'll answer all of your questions for everyone who's asking about Mara. Just go to my YouTube channel, and that video is there. I promise it'll answer all your questions. Lee Pilgrim says he's loading up on CCIV while they're in the SPAC phase. Yeah, you could see this also. You can see CCIV jump up post-SPAC and go back into the 20s just because it's no longer a SPAC. One thing to keep in mind is that SPACs are adjusting. SPACs are adjusting for the better. I think it was Switchback Holdings, Switchback 2. Switchback 2. This is a SPAC that I've invested in. I've bought shares at NAV, so I don't really care that it's under NAV. But they're merging with a new company called Bird Eye. You've probably, if you're in the metropolitan area, you've probably seen their scooters. I want to take you to their investor presentation, not because I'm trying to sell you on it, because it's whatever you guys want. But one thing that's extremely interesting about this investor presentation is you no longer have those massive forward-looking projections. It's not there in the investor presentation. SWBK investor presentation. Sometimes you have to play around with. There it is. How you doing? So it's these bikes that it's not the scooters, not bikes. They're in the metropolitan area a lot. I've seen them all over New York City. I've seen them all over Yonkers, where I am. So literally, when I'm looking at SPACs, I ignore everything. I go to the financials first because that's all that really matters to me. If the financial test doesn't pass, nothing else matters to me. I don't care about your business model. I don't care about your revenue. If your financials are crap, I'm not wasting time on you because that's what stuff is looked at. So here, come down to the financial summary. Here we go. Adjusted EBITDA margin. If you look here, okay, so they're not great, but again, you can see that these are not massive jumps that are happening. This is somewhat of a massive jump, but it's not that big because these are projections. I'll give them flack on that one, but the main thing that surprised me and I was really excited about was these projections weren't as massive as we're usually used to seeing. I've seen companies that see that these are the actual numbers. So you can see 24. This 40 dropped to 20 was because of COVID, because you can't have ride sharing on these things because of COVID. Now that COVID is dropping, they're going to revert hopefully back to close to where they were. I'm seeing them more in my area, in metropolitan areas. So you'll see this jump up. So this makes sense to me as a projection. And they're expecting to double because they're going to have a cash influx, so they'll be able to push out more. This is a bit of a ridiculous projection. I'll give you credit for that one. I would ignore this 2023 one. But just looking at 2021, just focus on just the 1 year that you're in now. I think it's decent. I think it's decent numbers. But again, I'm not trying to slide on this back. I'm just trying to say that the projections and the numbers that we're used to seeing, that we used to see on SPACs, where it's like, all right, we're going to make $1 billion a year, are no longer there. Plus, they gave us a financial statement where most SPACs don't have it. See, if you look here, this is what I liked seeing. This is what I love coming to. This is what you need to learn how to read. If you watch that Mara video, even if you're not into any stocks, you'll learn how to read an income statement. If you learn how to read an income statement, you'll be able to run your own valuations and figure out how to give your projections for your stocks to see where their accurate price targets are. So yeah, that was just the reason why I was jumping into Switchback. But let's see. Penn and DraftKings are getting hammered for a solid 3 to 4 weeks, says Timothy Dillon. How long do you think this continues? Well, Tim, I'll be honest with you, buddy. I hope I can call you Timothy. I'll stick with Timothy. I don't want to offend. So let's go to Penn. No, not Penn Davis. Barstool Penn. I took a position in Penn, and I hit my stop loss that day. When I took the position, it was the day of earnings, and I thank God that I set a stop loss. This is why you set stop losses on your swings. It saved me from having a massive bag. Look at where it is now. I bought at 86. I stopped at 83. Now we're at 76. I would have been down from 86 to 76. That would have been a massive drop. This is why you need to have stop losses on your positions that are swings. Look here, I was doing my analysis here on it, and boom, it's broken this trend line. It's broken the 200 moving average, and we've come back essentially down to, where was this? We've come back down to the December levels. I'll be honest with you, I think Penn might come down much lower. RSI is finicky. MACD is very red, finicky. Now, this is back to discussing that thing that we've been saying throughout the show, is an opportunity for a massive transfer of wealth, or an opportunity of building a massive wealth. Across the country, gambling is becoming more and more legalized. These stocks make their money from that. We know that Penn had good earnings, I believe. I want to just double check. Again, this is the power of the Benzinga tool. We should have it here. Yep, let's take a look at here. Show me the income statement. So you can see here we've jumped up. It's up here. Total revenue is up. Cost of revenue is not up much if you look at it for cost of revenue for this. And you need to look into the 10Qs or the quarterly reports to understand these cost of revenues and how they're broken down. It'll give you a better idea of what's going on there. Gross profits are up, which is good. Cost of expenses is up marginally, not too wild. It's up a little bit, but it's not too bad. But again, they're doing fantastic in my opinion. Cash flow is cash flow. Okay, I see why. That's depreciation. I'm sorry. Total cash flow is up. Total cash flow is up by a lot. Okay, that's good. And let me see their balance sheet. Balance sheet is up dramatically, which is even better. Shareholder equity is up slightly, but that's good. Up is good. They had good earnings. Again, this is the market. This is the market that we've been discussing from the beginning of the show. These stocks will sell off on any minimal fear, anything that's going on now. This is legitimate fear that they have now, and it's been answered. The variable has been answered. How is inflation going to be? The variable has been answered. It's high. Inflation is high. We're seeing it now, and people have been worried about this. And I get it. The fear is there. I get it. These companies operate on the basis that the interest rates will be low, and they can keep borrowing money for close to no interest rate, which is almost free. It's like margin accounts on something like a Robinhood, where it doesn't charge you too much to borrow money. So you just keep borrowing money. And then when the interest rate goes up, you can no longer borrow money that high, and you're left with a capped amount of income and budget that you can work with. So you have to start cutting, laying people off, and that looks bad. And then revenue. The tech companies that are not heavily debt dependent and can operate on their own and are profitable, like your Teslas, like your Facebooks, like your Disneys, like your Apples, will thrive. They'll drop for a short amount of time, they will drop, but then after a period of time, they will jump back up and they will go up. We've seen the value stocks, your Coca-Colas, go up. We're going to see those come back down and mellow. We're going to see our tech stocks come down, and then they're going to eventually come to a happy medium, and then they'll both begin to rise together. And that's where the massive transfer of wealth is happening. So this is how I want you folks to take a look at the stock market. This is a little bit more of psychology of trading here. Is I want you to look at trading as a car ride. Stop worrying about where you are now and focus on where you want to be in a year, in 2 years, in 6 years, right? Especially if you're a long-term investor. If you're a swing trader and you're a day trader, I'm sorry, this market is not for you. More for day traders, but for swing traders, not really, even though you can still find opportunities. The Patreon, we found a really good opportunity in the oil sector today that had like a 10% run. But it's going to be much more difficult than what it was in 2020. That market will come back too. But right now, I think if you adjust to long-term investing, find stocks that are great for long-term. Penn is a good one, I think. I like Penn long-term. I like Penn more than DraftKings, and I have a position in DraftKings. I have a position in DraftKings. I don't have a position in Penn, but I think if you look here, look, this is where we were in November. This is the lows of the market. I think we might come down and touch this. I really hope we don't, but we have a support level here that we're holding around 38. We have a support level here around 39. We have another one here for today that we held at 41. So we'll have to see how this plays out. But again, nothing has fundamentally changed about these companies. Again, you have to delete that line now. It's no longer valid. It's no longer a trend line that's valid. But I would more like to put horizontal line here. This is where if this is where the bottom of the market was last year in November, but these guys were SPAC before, so it doesn't really. We'll treat this as their March crash. But I wish it hadn't have ripped this support level of 44, but it did. That's the thing about inflation, guys. The market is a multivariable beast. It will adjust based off variables that we know and adjust off of variables we don't know. And variables can come in that are much, much more uglier than we thought. Bagwell, here we go. I got you, buddy. Let's talk about RIOT. So folks that watch this channel know I'm a bigger fan of MAR than RIOT because they're forward-looking, but RIOT is a good Bitcoin mining company as well. Let's take a look at it. As you can see, the RSI is headed downward, not a good sign. MACD is heading down, not a good sign. But again, RIOT did good. RIOT reported that they mined 206 Bitcoin, if I believe off the top of my head. We can probably see it in one of these headlines if it pops up, but over 200 Bitcoin in the past few months, which is good, which is fantastic. And yeah, thank you, CR. Anyone else who's watching, please hit the like button. Alex, I'll go over Wix if you hit the like button. I promise. Yeah, I promise if we have time. But look, RIOT, I think RIOT is like Mara. I think it has a bright future. It's severely look, the thing is, I don't think that they're undervalued per se. I think for PE multiple wise, they're undervalued. Price to book. Mara is way more undervalued. Mara is close to a 1 price to book value now. I'm not too familiar with RIOT's books. We can pull it up here. Their balance sheet of 233 million. Cash and assets, what are their total assets of 280? So their price to book, market cap. Okay. These guys are valued a little bit more richer than Mara is for price to book. Price to sales. Let me see what their revenue is. 5 mil. Okay, that's good. Oh no, I'm sorry. It's the same thing twice. Hold on, I don't want to go too deep into this, but short term they're going to hurt. Short term, all these stocks are going to hurt. That a lot of these stocks are going to hurt short term. Bitcoin, you can see this is a Mara and RIOT and the SOSs move off of Bitcoin, and if you look here, Bitcoin is not having a good day, so these stocks are not going to have a good day. Also, these stocks have about a I think last time I saw was 2.71 beta from Mara at least, which I imagine RIOT has the same one, to what the S&P 500 does. So if the S&P drops 2%, this will drop 4 point something percent, right? I'm not doing math off the top of my head. I'm exhausted. But keep in mind that, again, wealth could be made here. We know Bitcoin isn't probably not going anywhere for a long time. if we see, like, for example, Facebook come in and buy Bitcoin or Walmart come in and buy Bitcoin and add it to their balance sheet. We saw Palantir do it. And these are signs of confidence within the market. So you can see here, why is it moving? RIOT shares are trading lower as crypto-related stocks fall. Technology and growth sectors have continued to sell off amid U.S. inflation concerns. Again, this is CPI data, long story short, right? Alex says, do you like you? I'm joining late today. So if you have covered it already, I will rewind. Alex, I have not covered you, but you smashed earnings. They beat revenues, projections, and they raised guidance. I love you. I have a position in you, and I plan to add more you. I think Unity is a powerhouse company that people are sleeping on. I like the market sleeping on these stocks because it gives me more time to build up cash to go in and buy these stocks. Alex, I'm jumping into Wix now. Let's jump into Wix. Those of you who don't know Wix, it's very similar to Squarespace. I'm just double checking. Yeah, it's the same. It's the Israeli company that does the website building. It's just like Squarespace. If you've watched the YouTube video, you've seen someone with a Squarespace sponsorship. Wix is very similar in that area. So let's see. EPS beat. Again, they're not profitable, so that's okay. But I don't know how they're not profitable, but okay. That's, again, I'd have to dive deeper. But they beat estimates. They beat sales estimates, which is good, which is fantastic. They're raising their guidance, which is great. No, they lowered their guidance. Estimate was 312. They're coming at 38 to 312. So this is a little bit lower. Yeah, see, they're lowering their guidance. That's not good. And okay, the stock is doing bad. Not bad. I'm sorry. Stock is doing good for something that dropped guidance, because you might be saying, Ryan, what are you talking about? It's a 17% drop. Guidance was reduced in after hours. Right now, after market close, it hasn't dropped. Today, the big drop was happening intraday. I want to double check this because I don't want to look like an idiot. So let's go to the 15-minute chart. Okay. Zoom in. Where are we? Yeah, if you look here, it was essentially, oh no, these guys reported before market open. Okay, I'm sorry. They're having a bad day. I take it back. I'm so sorry. Yeah, Wix is having a bad day due to dropped guidance. That's what it is. It gapped down. Now you can treat this as an opportunity if you have high conviction in Wix and swoop in, because you're back down to January 21 levels. And Wix has been flat. Wix is not a stock that I see much growth in. Look at this. Going back to June 2020, it's essentially been stuck inside a box. It broke out of the box for a little bit here, which is surprising because it broke out of the box during the crazy red that we had in February. But I'm not too wild about it. Bruno, I'm not a Forex expert. I'm sorry. I know that the USD jumped up a little bit this morning, but then came back down a little bit. But I'm not an expert on USD. So I'm on Forex, so I can't really talk about it. All right. I think I'm going to wind down the show. We have only 7 more minutes left, and we got Money Mitch coming on, I believe, right after us. Someone asked about Palantir. I know we have a running joke that we talk about Palantir in every single episode, but I think it was Palantir that we talk about in every single episode. But I'm going to talk about Palantir because I could talk about Palantir. I could talk about whatever stock I want on this show because I'm on the other side of the comments, baby. But I'm just kidding. If you have a stock that you want to throw in the chat and I run out of Palantir stuff, we can talk about it. Palantir is going to be another one of those companies that will struggle. The technology is there, the catalysts are there, the tech is there, the team is there, but call sweeps are coming in, which is good. Here we go. Adjusted earnings came in at 0.04. Sales beat, which is great. Q2 sales, so they're essentially raising their guidance for a growth of 30% expected from 2021 to 2025. So that means if you're looking for annual growth rate, okay, folks. Let's take a look at this here for a second. We've been talking about building wealth for a long time, right, on this show. If Palantir can deliver 1/3 of this growth that they're promising, 10% growth year over year, that beats the average S&P 500 of 7% year over year. That beats the average, 0.1% of your savings account. So in my opinion, if Palantir is at 1/3 or even 1/6 of 5%, it's a good stock. Again, do your own DD. I've done extensive DD on Palantir and I have an extensive position in Palantir, but please do your own DD on this one. I like this stock a lot. If I had more time, I will probably, you know what I'm going to do? I'll do this. Go to my YouTube channel, subscribe at Ryan Rozbiani, and I'll do a video on Palantir, and I'll do a deep dive on Palantir and kind of explain my thought process behind it. I've tried to do a video on Palantir before, but it's been very hard. but I will try and do my best to do a video on Palantir. I'll even do a live stream maybe there with Sung, and we'll dive deep into Palantir. But in the final 5 minutes, I want to take a look at what SPY is doing. I want to take a look at what QQQ is doing before we wind down the show and hand it off to Mitch. Look at this. Look at this, folks. Where are we right now? We are $1 away. Well, I'm sorry, $1.95 away from touching our gap here. Someone in the earlier in the show was asking what indicators I'm using. I completely did not want to ignore your thing. I just got sidetracked. I'm using the 3 moving averages, the 21, the 50, and the 200 simple moving average. I'm using the RSI and I'm using the MACD. Yes, Sung Kim in the chat with the purple is Sung. He helps me out a lot with the Patreon stuff that I do, with the Discord stuff that we do together, with live streams that we do on my YouTube channel. So if you want to go sub there, go there. Just go to youtube.ryanstocks.com, Dan, and you'll see it there. So youtube.ryanstocks.com, and you can sub there. But make sure you're sub to this channel as well, because I'm going to be live on this channel talking about more stocks and doing more Q&A here too. So I want you guys to have access to everything. This is a fantastic channel with a lot of great stuff coming on here, and I'm trying to grow my channel as well. So I'd appreciate it if you guys sub there as well. Tom says, can you give my portfolio a quick review? Would love that. Tom Spianator, I love the Tom. Buddy, we legally can't do that. I'm not a financial advisor. I can't review your portfolio on live internet. I'm not a financial advisor. But I'd say check out the Patreon. Maybe, check out the Patreon. That's what I'll say. Bagwell is asking for Tilray. We only have 3 minutes. We'll do a quick look at it. TLRY real quick. I know that this is a fan favorite cannabis stock. Cannabis stocks have also gotten a hit today. No. Cannabis is having a hard time too. This used to be, look at this. This is, ignore the short squeeze candles here and just come here. This used to be a $20 stock. Cannabis took a hit when we heard that the Biden administration was saying that, hey, they were firing people because they had previous cannabis use. So that dampened a lot of the hope that people had for the cannabis bill being passed. So I'm personally sticking to my SSPK stock for cannabis because they've been thriving even in a world where cannabis isn't federally legal. So I'm just sticking with that. Personally, the individual stocks in Canada, I'm not touching. And if you want to go into a broader ETF, MSOS, coming from our own Spencer Israel's recommendation, is a pure U.S. cannabis ETF if you want to invest in without going into individual stocks. It's a lot more balanced. I've been watching this one myself. Can you look into NEO? We're out of time, my friend. We only have 2 minutes, and then Money Mitch is coming up. But I will be doing more live streams on my YouTube channel as well. If you want to subscribe there, I'll jump into your questions there. We'll talk about uranium there as well. We'll talk about a bunch of stuff. I'll be back on here live too to talk about more. Where were you guys like 15 minutes ago when I was jumping? I had to go to Tesla and talk about Tesla for 15 minutes. Where were you guys with all the questions? Song's right. Transfer of wealth. My buddy, producer AB, we're winding down, right?
Yes, sir. You're right. We got Money Mitch coming up.
I want you folks to do me a favor. You're going to see a screen pop up where it's Money Mitch. Mitch is fantastic. He's one of my favorite shows on this channel. I've got a lot of favorite shows. I'm not just saying that. Please go and watch that show. They're great. He's great. Subscribe. Hit the bell button. You'll be notified when stuff comes out. Producer AB, as always, thank you so much for everything. And if you guys want to find me, I'm at Ryan Rozbiani on Twitter. The link is in the description. And if you go to my bio on Twitter, I have it right here for everyone who's asking for the YouTube. If you click on this link right here, it will take you to this page, which will take you to the YouTube channel. Boom, right there. And all the stuff is here. That Mara video that I told you guys about, everything is here. All the links to everything. If you want to sign up for Benzinga Pro, it's here. I've got a fantastic video coming out about Benzinga Pro on my YouTube channel. For those of you who are curious about it and how it works and have no clue how it operates, that will be on the channel. So thank you all so much, Producer AB. Thank you, brother.
No problem. All right, Ryan, enjoy the rest of your evening. We'll be back for more after hours, maybe tomorrow, if not tomorrow, next week.
Roger that, brother. Have a good day.
You too.
Bye-bye.